Over the past year or two, economic growth in Europe has been a frequent topic for the U.S. The challenges facing Europe that specifically are at risk. It appears there may be early signs of a pending change in this important region of the world. In this morning's U.S. Bank Economic 360, U.S. Bank senior equity strategist Jim Russell is back with his perspective. Jim, how are you?
Good morning.
Europe has been very volatile in its economy now for quite a while. Where do things stand now?
Well, the times, they are changing, and maybe for the better. Maybe this falls under the heading of things we thought we'd never see. Europe, we got some data just last week that Europe is officially out of a recession as of the end of the second quarter. Some things have really moved forward. You can see the graph there from where we came from in the depths of the financial crisis, where we've been, a dip back into recession over the last 18 months to 2 years, and a little bit of a weak recovery is expected. I will tell you that the second quarter GDP for the Eurozone, which are the 17 countries that really have the euro as a central currency, that data is reflected on the graph there. 0.3% growth in the second quarter. We would expect that to accelerate and perhaps get to 1.1% by 2014. So the news is good. Why is this important at all? Europe combined is the largest economic entity in the world. It's larger than the United States. It's larger than China. So if Europe wins, everybody wins.
Greece, of course, some of the worst financial problems. Is Greece out of the woods?
Well, yes and no. We'll tell you that there is really a non-homogeneous type of view there. Europe is being led by Germany, candidly, and we have a table that really explains some of the disparate growth rates that we're seeing right this minute. The Eurozone, as mentioned, 0.3% growth in the second quarter. Again, Germany, maybe the strongest of the bunch at 0.7. You can see France there. Greece really brings up the rear at negative 4.6. We'll tell you that Italy, Spain, and really southern Europe in general continue to struggle just a little bit. So what we're hoping to see, Brian, is that after the German elections, which are slated for September 22nd, a little bit more pro-growth, less austerity type of measure and tone will take place and take root in Europe. So we think that Europe's on the mend. Slow but sure. It ought to remind us of our own recovery, really.
Jim, you say what we're hoping to see. Why should we hope Europe does well? What does that have to do with the U.S. economy?
The U.S. economy is especially linked to Europe. It's one of the reasons, candidly, why our recovery has been so anemic, so slow. The job growth has been so slow. We export a lot of goods and services to Europe. You can see that the U.S. corporate profits really peaked in 2007 or 8 in terms of the percentage that is attributable to non-U.S. areas, Europe being a big part of that. You can see the steep decline there over the last several years. Again, this is all attributable, a lot of it is attributable to Europe being in a recession. So if Europe improves, job growth here improves, the global economy improves, everybody again wins. So what we have is Europe accelerating, perhaps China decelerating, and perhaps the emerging markets following China a little bit. So there are some offsets, but if Europe does continue to move forward, that means U.S. jobs, and that's a good thing.
All right, Jim, you know I always say we appreciate U.S. Bank. I want to mention U.S. Bank Cincinnati Market President Mike Prescott will be delivering school supplies to the St. Aloysius students. More than 200 backpacks tomorrow. So thanks to you and U.S. Bank, and let Mike know how much we appreciate him.
Will do. Thank you, sir.